get there on your own. Face to show. I wanna see something new, a better part of you.
Check, check.
All right. I think we're good. Can you guys hear us? Can you guys see us? Yeah, somebody didn't want us to go live today.
Yeah, they didn't want us talking about our conspiracies.
The Fed didn't want us stealing their thunder, you know?
How's the audio, guys? Can everybody hear us okay?
Testing, testing. Mic check 1 2 1 2.
I think we're good.
Awesome.
All right.
Woo!
Heck yeah.
That was weird. That's a first.
Hey, it was bound to happen, right?
Eventually, yeah, the Fed was like, nah, we don't want them talking about this.
Here we are, though. All right.
All right. Well, you know, thanks for your patience, guys. Let's go ahead and get rolling. Welcome. Today is Fed Day, which some of you guys are probably interested in. Some of you guys are probably like, we don't really care. But no matter what your opinion is, it absolutely has a massive effect on asset prices and markets and the global economy. So I'm going to defer to my two smarter hosts who are way more in the know on the Fed stuff. What do we make of this announcement, guys?
It's not, well, first of all, rates remained unchanged. Overall interest rates remained unchanged. They did increase the reverse repo interest rate slightly.
Okay.
Which we talked about that scenario last week. But it's not surprising at all. I mean, and this is my personal opinion. I think the buildup to today was kind of, I don't want to say unnecessary, but I mean, the Fed has been clear that first of all, we're not back to full employment. We still have an unemployment rate above 5%. And we were, I think, pre-pandemic, somewhere around 3%, give or take. So there's still a lot of jobs that are not filled. There's still people collecting unemployment. So there's a lot of things that the Fed is looking to kind of work out first before they even think about probably raising rates. And I imagine that they were going to stick to their transitory agenda or their opinion on inflation being transitory. And they mentioned that again, that they do think that this is transitory inflation. But they've also changed their policy to where they're trying to target they're letting inflation run hot, above their 2% target. And the idea is they want to see a general overall, average of 2% over time going forward. So they'll let things run hot here, run, down there or whatever. And they're looking at more so the average. So it doesn't surprise me that they're not making major moves right now at all.
Trav, what do you think?
What a nothing burger Fed day, as expected. But,
Yeah.
It was important because this had the potential to surprise the market in a big way if the Fed did do something very unexpected. They, of course, did not do anything too unexpected.
The media just made it seem like this was going to be a big Fed day.
Yeah.
But
But there's a lot going on out there, right? There's this big inflation deflation debate. We've been talking about it. We've done some shows on it. And we can see the U.S. CPI numbers came out last week at some of the highest levels we've seen in decades.
5%.
Yep. And so we see that, inflation's still running above expectations. Inflation expectations for the future still looking pretty high. So the Fed, everyone thinks is running behind the curve. They're like, no, this is just transitory. The deflationists are saying this is just transitory. And the Fed is not going to hike rates anytime soon. I think 2023 is now when people are estimating they're going to hike rates. They didn't even stop tapering asset purchases, and so they're still buying.
Yeah.
They're still buying treasuries. They're still buying assets, and I think that's overall still pretty bullish. The market's selling off a little bit here, but this is really a very metered approach by the Fed, and they're not going to surprise the market. It doesn't look like with what they're trying to do. So. As many eyes were on this, it's kind of a nothing burger. And frankly, we're going to continue to have this debate, inflation, deflation. What should the Fed do for probably 2 years?
I mean, the market needs something to fight and argue over.
Yeah.
Something needs to be the story. It's kind of getting, it's starting to get old, to be frank. And I didn't look to see how the market was reacting. Okay, the market's selling off. Okay, why is the market selling off? That's my question. Like, the market
That's
should
the thing,
be
like, Fed
happy
days- yeah.
that there was no major move made. So I think personally, my opinion is the market has needed a reason to sell off for a while. Like,
Yeah.
we've been at, elevated valuations in a lot of different sectors, and a lot of the recovery plays have already started to price in the recovery, and now we're at, okay, what do we do now? Are we buying commodities? Do we still think there's room there? Are we buying gold? Is there still room there? And I think that the overall stock market has kind of needed a reason to sell off, because it's just been hovering at all-time highs, barely trying to break out, but barely able to. And so to me, like, I don't know why the market is selling off, but maybe it just needed a reason.
Well, and that's why whenever I was day trading the indices, I would never trade in front of, during, or right after the Fed announcement, because
You
the
never
price
know.
action is just so random, and you get this increase in volatility, price swings around, and then usually within an hour it'll settle out. But like, to try to front run or guess what price action is going to do after a Fed announcement, no matter what the announcement is, hawkish, dovish, whatever, like, it doesn't matter. Price action is just going to go wild. So
Yeah.
I don't know. It's interesting. I mean, I was reading the report here. And they literally said inflation has risen, comma, largely reflecting transitory factors, though, right?
Yeah.
So they're definitely pushing this narrative. But I think Paul Tudor Jones the other day said quite literally, like, no, it's not transitory, and this is here to stay, and it's going to be higher than people guess. And then Kyle Bass was even saying he thinks real inflation is up over 10 or 12%. Do you guys agree with that or disagree? Or
I don't have a view on Bass's figures, but I think, like, I was looking at some data the other day. There was a Wall Street Journal article that was talking about this inflation deflation debate, and it pointed out some subset CPI figures that are sort of these wonky sets of data that are called, like, the sticky CPI.
Yeah.
And that is basically a subset of prices within the CPI that are considered sticky, meaning once those prices rise, they tend to not get reversed. And that would include things like, certain types of consumer good prices, and certain types of, like, things like wages and things like that could also be considered sticky. And that rate of sticky CPI is actually around 3% currently. And I've been saying, for the past couple of months, like, watch what happens with these types of categories of goods or things like wages that are hard to pull back price increases on. It's one thing to see energy prices or shipping prices go up, and those can come right back down.
Or cars.
Lumber prices, used car prices, right? Those can move pretty dramatically one way or the other. But it's the structural stuff that I think will determine whether or not we get sustained inflation. And that is stuff like, structural problems in supply chains, wages,
Food.
increases in sticky CPI type baskets. So those are the things that we're watching. And right now it looks like those are still increasing at a pretty significant rate. And so I'm still in the camp where I think inflation could run well above the Fed's target into the next several years. So
Yeah.
we'll see what happens, but
it makes sense. I mean, restaurants aren't going to raise prices and then lower them later, just like they're not going to pay, we've seen all the signs, like, looking for line cooks, paying 18, 19, 20 bucks for cooks. And they're not going to pay them that now, and then in 6 months try to pay them, 12 to 15, right? So
Yeah.
those jumps in prices are absolutely going to be sticky. But, to your point too about commodities, if we look at lumber, like, commodity prices are inherently mean reverting, meaning, like, anytime you get a big parabolic move, like, a lot of times they come back to earth. And it's good to see that the parabolic move on lumber is now down 50% off the all-time highs, right? Like, these types of moves aren't sustainable. It's not like a stock that can make massive gains, or a Bitcoin that can make massive gains and then sustain them. It's like it's a supply-demand imbalance, and the higher the price of a commodity goes, like lumber, the producers will step up their production, therefore lowering prices, right? So I love that point. You got to look at the things that are increasing in price and are never coming back down, and then stuff that's just going to be really volatile.
I think wages is kind of a concerning thing for a lot of business owners, particularly small business owners too. I was actually chatting this morning with a business owner in our community, and he was saying that like he's having a hard time getting people to want to take a job for less than, you know, $20-$25 an hour for something that before was, you know, a lot cheaper to hire labor to do. But now teens, you know, people that are teens or entry level into the workforce, they're going in and they're wanting higher wages now. And so that's becoming a problem for a lot of business owners that are having to raise prices. They don't want to raise prices, but they have to raise prices if they want to stay in business. And so, yeah, it's like the circle. It's like a self-perpetuating circle. And then it's kind of nerve-wracking to think about what this is going to potentially do for businesses.
It's going to put the squeeze on restaurants who already have paper-thin margins, right?
And obviously, I'm all for raising wages as the cost of living increases. I think that wages have been stagnant, you know, for a while, and we're finally starting to see wage increases. But I feel like the way it's happening has come from this, it's kind of chaotic, and it's come from this place of just craziness with commodities and craziness with monetary or fiscal policy and you know, unemployment, paying people more than what they're used to making, and now that's sticking. And maybe that was the government's plan all along, but we didn't go into this, you know, we didn't ease into this. And I think that's part of the issue. It's kind of like a shock for a lot of these businesses.
And to your point about a shock, you know, just looking at one statistic here on Y Charts, which, by the way, we're sponsored by Y Charts. So thanks to you guys for supporting the show. And we use this platform for basically diving into all types of fundamental data and global macro data. But one chart, Nikki, that you pulled up was U.S. job openings. And you can see how it was kind of the rubber band effect, where during March of 2020, during the COVID scare, things dropped off a cliff. And now they've just gone parabolic, right, to new all-time highs and surpassed. And I don't know, for you guys that are in chat, let me know what you guys think. When you're driving around, do you see a lot of for sale signs? Or for sale. Hiring signs? You don't see any for sale signs. Those just get sucked right up. But, you know, we're seeing hiring signs all over the place.
Everywhere. Yeah. I do not remember a time in history where I've ever seen so many hiring signs that had A, the price per hour that they're going to put, and B, bonuses that they're paying for people to come in and get hired.
Yeah.
Like, I sent you that picture. I was in Tahoe and I sent you the picture of the restaurant, and it said like, here's the hourly and then the $500 signing bonus or $500 hiring bonus. And it's just, I've never seen that before.
Yeah. Somebody parked a school bus on the side of the road down the street and put a big sign saying like, hiring drivers, 19 or 20 bucks an hour or whatever it was.
Yeah.
So people are desperate.
The problem is, and this is something that I know personally, because I know a laborer, people that are skilled laborers or skilled workers, they are not, like, they get paid $20 an hour. You know what I mean? So what is it going to mean for them? They are masters in their trade and they're maybe getting paid $20-$25 an hour. Are they going to go to their employers and push for higher wages because, hey, why the hell am I going to do this hard construction job making $23 an hour with barely good benefits when I can go work at Chick-fil-A and make $20 an hour, or Chipotle and sit in an air-conditioned room and not be doing construction? Like, I that's kind of what I'm thinking. Like, what does that look like? I mean, even nurses, dental hygienists, like, they don't make crazy money.
So is this going to put pressure, I guess, on skilled labor, and we're going to see rises there?
I don't see how it doesn't. I don't see how they don't say, like, hey, we're demanding higher wages, because if not, we're going to leave and we're going to go do something easier for the same amount of money.
Yeah.
Or a little bit less, but maybe we're not working as hard, or I don't know. Maybe that's just me thinking about it too
Yeah.
deeply and going too far with it.
No. I mean, I think it's a systemic thing, right? And one level affects another. And I don't, like you said, I don't think we've ever seen something like this in our history. I mean, it was for so long, it was the opposite problem, right? It was hard for teens and entry level workers to get jobs, and they were always underpaid. And COVID definitely shook things up. Some for the better, maybe some TBD. But Craig just said in chat, he goes, yeah, tons of hiring signs in my area, Northwest Arkansas, seeing the same thing you guys are seeing. Hiring bonuses or places just closed because they can't find people to work. Makes sense.
I mean, that's in alignment with what we're seeing in the data. So
Yeah.
it's just
Crazy times. I don't know. Let's take a look at the markets. So as of right now, Bitcoin's down a little bit. We're under the 200 period moving average, kind of stuck in between support and resistance. Yeah, it looks like stocks had a little bit of a sell-off today on the Fed announcement, where basically for the past few weeks, really, they've just been coiling up. And this is kind of the first little pop that we've had.
fake out, breakout.
Fake out, breakout. Yeah, gold's even pulling back. So a lot of markets are looking red today and maybe just starting to cool off. I don't know. What do you guys make of that?
Yeah, I think if I had to guess, what's happened here is there's a little bit of movement on the 10-year and 30-year yields. Actually, most of the movement's in the 10-year and shorter durations. And I'll tell you why I think that is. So the one thing that I expected the Fed to do at this meeting, they did do, which was they raised the interest rate on excess reserves and they raised the rate on the reverse repo. So I think if you watched the show last week, we talked a little bit about this, but there's been this massive amount of liquidity on bank balance sheets and not enough places to go with it. Money market funds have had problems, finding enough treasuries to invest in to park their funds, at least in shorter term bills. And so what's happened is the use of the Fed's reverse repo facility has gone parabolic. We showed the chart
we showed
last
that
week.
chart. Yeah,
Still printing above 500 billion a day. And so banks are parking all of this excess liquidity and money market funds are parking all the excess liquidity in the Fed's reverse repo facility overnight. And now the Fed actually raised the interest on excess reserves that they could own, that banks can earn, so that there's a little bit of incentive now to shift out of the reverse repo facility and perhaps into some of these other places where they can park short-term liquidity. So that could be why we're seeing a little bit of a rise in yields. And therefore, when you see that quick rise in yields, the market will tend to sell off. And so I think that may be what's happening here. It's sort of silly to me. Like, I'm not really... I think it's sort of like you said, too, maybe the market was kind of looking for a reason to sell off. Like, it was just not really on that sound of footing.
Yeah.
So I'm not too concerned here. I'll continue to keep an eye on yields and what happens there. The level of interest that the banks can earn on excess reserves is still minuscule.
Yeah.
So I would expect potentially liquidity to continue flowing into government bonds despite their low yields. And that, that should continue to probably support markets through the summer, I would guess. Now, lots of stuff could happen between now and the end of summer that's outside of what we're talking about. But that's just sort of my take on what's happening. So I'm not too concerned. Like I said, the market's just having a little bit of a reaction, but it doesn't look that concerning to me overall.
Yeah. It is interesting, though. Like, a lot of people are kind of dialed into the inflation debate right now, people that have never really cared about it because it's never really been an issue, right? Rates have been falling for the past 30 years or more. And it's like now people are thinking about the fact like, oh, prices could actually start to go up. And like we've talked about before, our generation has never really dealt with that in a meaningful way, right? Like, inflation's always been really low. And then the question after the 2008 financial crisis was, well, where the hell is the inflation, right? Is it just getting kicked down the road? So I think the fear level with that, or at least the attention level of your average person, is definitely starting to go up, and maybe that could spook the markets a
Well,
little bit.
hell, when you go to buy a house and you go to buy a car and it's like $1 million, like you can't find a damn car for a decent price. Yeah, I mean, that affects the consumer. And
Yeah. I don't know if we talked about this last week, but the fact that used car prices were up 30%.
Yeah.
That is absolutely insane.
Yes.
Yep.
And then obviously real estate. Maybe we should talk about the BlackRock situation and the institutional buying and kind of what's happening there. I've been reading on it. I'm not completely educated on what the volume is that they're buying, but it makes sense what they're doing, I think. I don't think it's good for your average American, but I don't know. Have you guys looked at this?
Yeah, there's a lot of fear mongering about this. The same thing happened after the GFC in 08, 09. There were a bunch of funds that were put together. A bunch of hedge funds started funds that were specifically aimed at buying up U.S. property.
Yeah.
And it didn't seem to affect the market too much back then. Now, the difference now is that the U.S. property market is kind of on fire, and you have liquidity being poured in by investment funds. So it's a little bit concerning as far as the timing is concerned. And obviously BlackRock has a ton of assets under management. So, this in terms of size relative to, the overall housing market, especially in a tight market like this, could be an issue and could be also why we're seeing prices move up so quickly.
Yeah. It's probably not just BlackRock, but it's a lot of companies that are just going on this buying binge, right?
Yeah, and obviously one of the big structural things that has created this issue in the housing market is the work from home phenomenon, the migration patterns changing among citizens. I mean, the COVID crisis really did create sort of this new emergent pattern, or at least it doubled down on this emergent pattern of migration to places with lower tax rates, places, from north to south, because of better weather. When people can work from wherever, then they're going to choose places with, more quality of life, maybe different characteristics than where they were living. And so the migration patterns have been changing a lot over the past year. And that, I think, has had an effect. And we're just underhoused because after the global financial crisis, builders were very slow to add capacity to the housing market. And in a lot of cities, zoning regulations create restrictions against creating more housing. So I think we're short. I saw a figure today that some economist was estimating we're short like 5 million houses in the U.S.
Wow.
I don't know if that's the right number, but we're definitely short in a lot of areas.
How are home builders priced right now? Are they expensive, or is that a potential play?
Yeah, actually, I haven't checked in on the home builders in a couple weeks, but their stocks have been really strong performers over the past year or so.
Yeah.
Taking a little breather, it looks like, here over the past couple of weeks, but yeah, all the major home builder stocks have been are up well above where they were pre-pandemic.
Assuming that, lumber and other input costs of construction come back to earth, right? Maybe that would be a good play over the next few years if they can actually compete and start building some supply. Taking a look here, this was last week. I didn't catch this thread when it came out, but this is one that kind of went viral that, was, I think, kind of a shock in the headlines, where it said BlackRock is buying every single family house they can, paying 20 to 50% above asking price and outbidding normal home buyers. And then, this person went on to basically explore this idea further. I don't think it's just BlackRock, right? Like individuals are doing this too. Yeah. This is what happens when you have a bubbly market is, people go on a buying frenzy and prices go parabolic, right? And then this was kind of an article pointing out maybe a counterpoint, talking about like volumes. So there's like the total value of the U.S. rental housing market is like $4.5 trillion, right? And then they went on to talk about how much volume and real estate BlackRock actually owned, and it was a pretty small amount, smaller than you would think. Now, obviously, they have a ton of money, assets under management, so that they may be on their way to buying a hell of a lot more. But I don't know. I don't think it's probably correct to your point, Trav, to say it's just BlackRock, right? Like it's a lot of other people that are buying it too.
iBuyers have also entered the market in a big way. Open Door,
yeah.
Zillow, they're doing the iBuying. So they're now using their balance sheets to buy homes. Although they flip them pretty quickly, they're not holding them in an investment portfolio typically the way that a BlackRock would, or even an individual investor. It's worth pointing out, though, what you said earlier, which is, individual investors have been doing this for a long time, real estate investors and just on a much smaller scale. And at some level, there is a supply demand counterbalance here. So if BlackRock pays too much, then their rental yields are going to be too low, and they're going to, their portfolios are going to suffer, and they're going to have to sell or whatever. There's also this idea that, if they bid up home prices too much, you always have the option. I guess I guess we can argue about this, but there is an option always to rent and use the capital that you save by renting to invest in stocks or crypto and earn a higher yield, right? So
Yeah.
sometimes actually if investment groups want to bid up the US housing market to just absolute insane levels, go do it, and the rest of us will take advantage of it, and that will have to normalize at some point, and we'll just have to use our investment dollars and other assets.
So the joke might be on them after all, in the end.
If they overbid on price, I
Right,
think
yeah.
so.
Yeah.
Yeah.
I mean, we've seen this before, right? This is a typical market cycle. Like, yeah, my attitude right now, because I've been in the market for property, right? Like looking at the ranch in South Texas, looking in the Pacific Northwest. Like, if people want to outbid me and they want to outcompete and drive prices up, awesome. I have no problem sitting back, being patient, waiting for some kind of pullback, right? I don't think prices are going to go and then just keep going astronomically without a crash. Like,
Yeah.
if that happens, great. I'll go to another country and I'll buy undervalued real estate, right? If things just want to get out of hand here. But I'm definitely not going to get caught up in the game and try to outbid and fight other people. And nope.
Yeah.
I'm not
Been through
bidding
that game before.
$100K over asking like these people are doing. I'm not doing it.
Yeah.
It's like we saw after the GFC when prices get too far out of line with things like median income, especially on a broad scale, then inevitably they're going to have to correct. I mean, it's sort of like, you can't service mortgage debt without income, and if people aren't earning enough wages relative to home prices, then eventually that's got to reverse itself.
Yeah. I saw a interesting comment in here. JL said, I was just at a large restaurant near Chicago called Uncle Julio's. They told me it'd be a 2.5 hour wait to be seated. The restaurant was empty and they told me they were understaffed. Unreal. I think that's a common thing,
Yeah.
right? Like I know here in Austin, it's like you can't even get a reservation at a nice place within a week or two. I think that's a combination of being understaffed, but also like the over demand. And to that point, there was a pretty interesting stat that came out that was showing restaurant versus grocery sales.
Yeah, that was inevitable.
For sure, yeah.
Yeah.
It's like historically, restaurants kind of outsell grocers. And then obviously during COVID, it was like restaurants took a nosedive and then it came back. And for the first time over the past couple of months, restaurants are back above grocery sales. And, people are just flooding, trying to get the hell out of their houses. So,
You would think that the government would cut off the extra federal unemployment benefits early if this is such a big problem. If they're seeing there's job openings, if they're seeing wages increasing and all of these things that are happening, you would think that they'd be like, we should probably do something about
No,
this.
they won't. There's a perception issue there, right? If you cut off unemployment benefits
Right.
early, you're the cruel, government.
They
And
leave
I
that
get
to the
it.
states
They
to
leave it
do,
to
which
the
some
state
of
to
them
be
have.
the bad guy.
Yeah.
And some state, like you said, some states have cut it off, but you'd think that they'd like put a stop in it and be like, "Yo, this isn't working anymore."
Yeah.
I don't know. It's just strange.
It's weird. I mean, look, this is like a ripple effect of a global pandemic, right?
Yeah.
Like things aren't going to just like go back to normal exactly the way they
Yeah.
were overnight. Like there's going to be these imbalances and these shifts. And as investors, we can look at it and try to find awesome opportunities, right?
Yeah, and I think there will be, and I think a lot of stuff will normalize over time, but some of the structural imbalances are going to take some significant time to work themselves out.
Yeah. Well,
But there's
definitely.
also opportunity there for entrepreneurs and there are arbitrages emerging on a local level. If you can create a ghost kitchen, right? If restaurants are closing because there's not enough labor, and you find a more efficient way to do it via ghost kitchens and delivery or using robots or whatever. We saw there's a pizza making or a pizza delivering robot company that's now launching in Austin. There's stuff like that, right?
Yeah.
I think there'll be creative solutions to some of the structural stuff over time. It just takes time.
I did hear an argument that a lot of boomers ended up, during COVID, they ended up retiring earlier than they expected just because of the situations, which opened up a lot of jobs because they're not going back to work, which I thought was an interesting argument. And then the other argument was like a lot of people are deciding that they don't want to go back to their crappy jobs and they're seeking something different, or they're completely changing their lives in some drastic way,
Yeah.
or they're starting a business, or they're doing Uber and freelancing or whatever. So, what does it look like if that is the case, and like just there aren't enough people to fulfill these jobs that are being created?
Yeah, which I think
Then what happens?
At some level, that's great, right? People that have been stuck in a job that they hate, that
Yeah,
they're probably
I agree.
underpaid in. It's like, sometimes it takes a really bad event like a global pandemic to shake people out of their quote unquote comfort zone or get them out of a shitty situation.
Yeah,
So
I know people personally that have done that, and they're doing complete career shifts or starting businesses, and it's like totally happening out there.
yeah.
But my question is, like, what happens if people don't come back to the workforce and fill these jobs? Like,
Yeah.
what does that look like?
To that point, here's another comment from Derek. He said, in California, you still don't have to even be actively looking for a job while unemployment. You just have to be, quote, available for work, whatever that means. So, yeah, I guess that is a problem, right? It's a balance too, right? Because you want to pay people enough. You want them in jobs that are fulfilling. But at the same time, you've got to make, restaurants and small businesses profitable so they don't go out of business. So it's a volatile time.
Alex said, crypto allowed me to do that. Fire.
Hell yeah.
Fire is financial independence, retire early. Congratulations, Alex.
Yeah,
See, I mean,
that's
it's
great.
cool. It's awesome. That's so awesome.
Yep.
Let's talk about crypto. We haven't talked about crypto yet.
Yeah.
Not
Oh
in a
my
big-
God.
Not
Okay.
in a major way.
So crypto's actually been pretty quiet, not quiet, but a little bit slow. Obviously, May 19th. So it's been about 30 days that Bitcoin's been in this kind of holding pattern, right?
It's teasing you.
And honestly, guys, I have been feeling kind of cringy about some certain things in crypto.
I can name one.
This shit right here.
Oh man.
Kim Kardashian and Ethereum Max. So the other day, look, CoinDesk even took a screenshot, and I tweeted. Where is this? Where's my little tweet here? I don't know where I
You
put
gotta
it.
Find it.
Oh my God, where is it?
Oh no.
Oh well, here I'm gonna go.
Okay.
Oh, here it is. Yeah. So okay, so I said, when will the celebs learn? Come on, Kim K. So she basically got paid to pump Ethereum Max, which isn't even. Look, I believe it's an ERC20 token that recently launched, and basically nobody learned any of the lessons from 2017. At least none of these celebs did back when. A couple of the celebs got sued for pump and dumping, and I don't know. This to me is just, it's disgusting. They need to stop. Mm-hmm. And it's so cringy and so bad for the space.
I didn't believe this was real. I saw the video, the actual Instagram story, and I saw it on Twitter, and I was like, there's no freaking way that this is real.
Yeah.
I went to Kim Kardashian's Instagram to see for myself, make sure it was her verified profile. And holy shit, sure enough, it was her being like, hey guys, got some big news. And then it was that screen. And
Yeah.
my head exploded. Literally. I was like, you have got to be kidding me. How she just made herself look like an absolute fool
Yeah.
in front of the crypto community specifically. Because like, obviously she's not aware of.
Well, and she's
Of
not
what-
she's not promoting that ad to people that are in crypto that know what's going on. She's promoting it to people that don't.
That's why it's so
And
frustrating.
that's the dangerous part, right? And the only thing she did was like hashtag ad. But I believe that if you're a celebrity and you're getting paid to promote this shit, you have to put down how much you're getting paid. I know some of these newer crypto YouTubers, that's how they make their money, is they get paid from some of these shit coins. Where we have a no promotion policy. Like, we want to be objective, and so we don't do that. But if you do that, I think the SEC made it clear, like, you have to state how much you got paid, which in this article they're saying she probably made like somewhere around $500,000, maybe more. I don't know. But if you do that and if you're not honest and you try to make it seem like it's something you actually like.
But guys, they're burning 400 trillion tokens
Oh my
is
God.
a straight up
of
pump
their
and dump.
2 quadrillion that they had issued. It's ridiculous.
Yeah.
Anybody that knows anything about the markets knows that was dumb.
Yeah.
And like these people are going to get scammed into this stuff. And yeah, she basically just did a pump and dump, essentially, probably.
This is a straight up pump and dump.
I don't see
the
how.
chart even looks like a pump and dump.
That's what I'm saying. I don't even see how she gets away with
She
that.
won't, I mean, she'll probably get sued. She should.
If the SEC ever wakes up and gets off their lazy asses, then this would be a prime target because you can send a message to the rest of the world and you can make an example. But, perhaps...
It's obnoxious. Yeah.
I don't know.
Anyway, okay, so at the same time that we've got this cringy shit going on, we've actually got some really interesting and positive developments happening. So obviously, El Salvador made Bitcoin legal tender, and a bunch of other countries are jumping on that board. One of the latest ones is Panama. So they're going to present a crypto-related bill in July. This is really just, I think, the snowball effect of what we're going to see. And I think this is one of, if not the most interesting things happening in the world right now. A lot of people look at this and they're like, oh, it's small economies. It doesn't really matter. Well, yeah, this is where it starts, right? The momentum is building. And Panama, this is interesting because Panama is another one that also uses the dollar, right? So just like El Salvador, they don't have their own sovereign currency. So it'll be interesting to see when one with their own currency, Argentina, Venezuela, something like that, when they start to use Bitcoin, that'll be interesting to contrast that with countries that do use the dollar and see how the differences are there. But
could this be a case to invest in emerging markets? Maybe.
Probably too early. It's probably too
wealth?
early to invest on just that alone.
yeah, it's not going to have like an immediate effect on their economy.
But I'm thinking advance, y'all.
I do think, it is interesting you mentioned that because emerging markets, especially in South America, have lagged developed markets, and particularly the U.S. market, for like the last 10 or 15 years. Basically, since the great financial crisis, since the GFC, the South American markets have lagged massively. And part of that, is because of poor macroeconomic performance and depreciating currencies and things like that. But the valuation multiples on some of that stuff is pretty lucrative. I mean, seemingly lucrative. But I was looking at, I think last week at Telefonica Brazil, which is one of the large telecoms in Brazil, and actually has a pretty good balance sheet, pretty good customer growth over the past year, trades at 8 times earnings or 8 times cash flow.
What's the ticker?
Pays a dividend. I believe it's VIV. Yeah. So there's an ADR that trades on the New York Stock Exchange. 7 or 8% dividend yield. Stock's been in the gutter for however many years. If you look at a 5-year chart, you'll see. Mm-hmm. So stuff like that is sort of interesting. Now, countries like that have had a lot of problems with government corruption, with scandals, and that is something that they really, if they could focus on the governance side, that would improve a lot. And then also if they could get the currency issues under wraps, they could solve those. You could re-rate from 7 times earnings to probably double that on something like this, a high quality, large cap company that's actually providing services and generating profit.
Nice. Yeah, and a lot of the emerging market ETFs are actually looking really bullish too. Like here's SCHE from Schwab. Mm-hmm. Basically had an all-time high breakout. I don't know. This only goes back to 2010, but after a decade of chop, it looks like things are starting to pop. Mm-hmm. Mm-hmm. And then also, just international. So I think this leans what's more in the SCHF. There we go. If I can talk today. International is more like economies like Japan and larger economies, right?
Yeah, it tends to be.
Yeah. So interesting. Yeah. I don't know. I mean, I think obviously accepting Bitcoin is a bullish proposition for these smaller economies, but I think it'll probably take at least a year or two or more to actually get mass adoption and work out the kinks and figure out how it's actually going to look on a day-to-day basis.
I guess. Oh, go ahead.
So let me tell you what's interesting and why this matters. So a couple of the big problems in Latin American countries have been monetary policy. Like you see countries like Argentina, which printed too much of their own currency, right? And then also borrowing in currencies that are not their own. So when you think about developed markets like the U.S., Japan, they have these massive debt levels, but there's they have super low interest rates and there's never any default risk because they can print their own currency and pay it and buy their own bonds, right? Like we're seeing the Fed do right now.
Yeah.
You can't default on bonds in your own currency if you're a sovereign currency issuer, right? So that's one part of it. South American countries have been borrowing in currencies that are not their own, and they've been running monetary policies that are a bit suspect in some cases. Crypto might offer an opportunity to solve both of those problems, where one, you could actually set your monetary policy in a way that is tied to a rules-based blockchain, right? Whether it's Bitcoin or something else, you could set a rule that keeps inflation of the monetary base in check. So that's one thing. And the second thing is, if you need to borrow money, you could potentially borrow money in different fashion than saying doing IMF loans that are dollar-based, right? So crypto potentially could offer some of these countries a way out of the trap that they've been in.
That's what I'm thinking.
And I just saw a question from Ryan, which, to your point, he goes, will the IMF stomp this out?
Fuck the IMF.
Whoa.
Yes.
Okay, I actually don't really have a strong opinion about the IMF one way or
That
another.
sounded like a strong opinion.
That sounded like a pretty damn strong opinion.
But
I agree, though.
If I'm a South American country,
Yeah.
and the IMF is trying to shove all these like conditions down my throat, and I say, well, if I have access to capital through crypto markets or whatever, then fuck the IMF. Fuck the IMF.
Yeah.
Go away, IMF. We don't need you.
Why don't we explain a little bit? And when I say we, I mean you. Why don't we explain how the IMF gets these smaller economies in really shitty situations? Because I don't think a lot of people understand how that works.
Yeah, I mean, I don't pretend to know all of the back office workings.
Yeah, but like
of all
the
this.
high
But yeah,
level.
I mean, the
Yeah.
IMF is this global organization that a lot of the developed countries pay money into to fund, and the idea is that they're gonna help developing countries, right, by offering loans and offering aid and capital. But the problem is these loans are often denominated in dollars. They're often tied to lots of conditions about what those countries have to do politically or economically, and in some cases, the IMF is making them make good choices, but in a lot of cases these conditions like hamstring these countries and just keep them in this this trap of not being able to grow their economies. And so that's something I think it's sort of like if you were a corporation and you were looking to raise capital, you would go look at your different avenues to raise capital. And if now crypto is offering a way for these countries to potentially borrow money without some of these conditions, why wouldn't they choose that? You should go seek other avenues for capital.
Yeah, absolutely. I mean, I think if they can just get under that thumb of the IMF, then they can. Yeah, I don't know. I don't see any downsides to it.
I guess the other thing I'm thinking about on that topic is like the people of those countries will feel more compelled to own some Bitcoin.
Yeah.
And use it. Maybe not use it, but at least like be aware of it and have some. And then if Bitcoin does do what people are thinking it will, which is appreciate over time, then that will lift a lot of those people out of poverty. Potentially. So it's almost like when I brought it up, the play is really on Bitcoin going higher and helping those people get involved with it and helping them build wealth,
Yeah.
and then that pulls these emerging markets out of their situation and they become wealthier countries.
Yeah, I mean, we've seen that on a person-by-person basis over the past 8 years,
that's
right?
what I mean. Like, why wouldn't it happen with whole groups of populations and countries?
Yeah. And I mean, like we talked about last week, like there's downside risk too, right? Volatility
Absolutely.
matters. But even if they put a percentage of their wealth into Bitcoin, like the protection that they have against runaway inflation of bolivars or pesos or whatever, or even dollars, right? Like, it's there. And it's not just for us, right? Like people in the West, like we've had maybe the easiest access to Bitcoin, but the people that really need it are in South America, Africa, and parts of Asia, right? And parts of Europe too, that don't have access to all the stuff we do. So I am so for all of that.
Now, it's worth also saying, though, that some of these countries need to solve their governance issues and stop electing oligarchs who are looting the country's best assets and, putting them in socialist regimes that are basically stealing all their wealth, right?
Yeah.
So
Political risk
they've
is
got to
huge.
fix that at the core as well in parallel with, improving the monetary system.
You mean corruption's bad?
Yeah.
It's true. PTJ, Paul Tudor Jones, he made some more comments this week. He's leaning into the idea that inflation isn't just transitory, and he's looking to go all in on some inflation trades. And I think he's got 2%, correct me if I'm wrong, guys, but 2% of his portfolio in Bitcoin, and he could go up to 5%. He looks kind of like an evangelical preacher right there, doesn't he?
Yeah, he does. Yeah.
But yeah, I don't know. I mean, this is obviously one of the best investors of all time, and the fact that he's going in, in May he bet 1% to 2% of his assets in Bitcoin, and he's managing what, 45 billion, so that's not an insignificant amount.
Yeah.
Yeah.
Let the train continue on. Nikki, what was this? This is something that you retweeted from Cullen.
So Cullen quoted downtown Josh Brown. I don't know if I'm saying it right, but basically he said, if you own stocks, then guess what? You already own the greatest inflation hedge known to man.
Oh, that's a strong statement.
So here's why I wanted to bring this up.
Okay.
Because it's true. Like if you look historically at the S&P 500 returns, it's returned about 10% a year, after inflation about 7%, give or take. That has beat inflation and helped people grow a lot of money, right?
Sure.
So it is true. Granted, there are these short-term periods in time where things don't look so hot for equities, and equities aren't, winning out and beating inflation or whatever. Look at the 70s or something like that. But I'm curious to hear particularly Travis's take on that. I mean, do you think that people are missing the forest for the trees here with this inflation argument, and that, overall long term we can continue to expect equities to maybe not beat inflation at the same level on an annualized basis, but maybe keep up closest that anything else can? I mean, do you disagree with that statement that owning equities is the greatest inflation hedge of all time?
I think it's misleading because it presumes that like all stocks, like if you own a bunch of passive ETFs and you're just heavily invested in stocks, that like you're going to do great in a high inflation environment, and that's just, the data just shows that's not true. If you look at periods like the 70s where inflation was running really hot, what happened was valuation multiples compressed a lot, and a lot of stocks got crushed, at least in the short run. Now, the idea is that yes, like businesses that have pricing power should be able to over time pass through price increases, and therefore, they can increase their revenues nominally, they can increase their net income nominally, and just at least keep up over a long enough time frame. And again, that's true for a lot of companies, but not true for every company. And some companies fall behind and their margins get crushed in inflationary environments. So I don't know. I think as a broad statement, it's a little bit misleading. So
okay.
I think there's risk to owning, especially in this high valuation environment, there's risk to owning a significant portion of stocks that may not benefit, that may see multiple compression if we get higher than expected inflation on a medium or longer term. So yeah, like I guess if you're in the market to hold your stocks for 30 years, it probably works out fine because stocks over long enough time frames have outperformed inflation. We've talked about that data. We talked about like studies like the rate of return of everything that shows stocks and real estate to be the two of the best asset classes historically in terms of average returns above inflation. But that's averages or medians over long decades of time frames. Again, if you go back to a shorter time frame like the 70s when inflation ran hot, stocks didn't perform so hot.
And we have a comment that's pretty interesting. He says, Sailor says the problem with stocks is that they're essentially fiat derivatives since they're based on the U.S. dollar, right? So they are dollar denominated. And so I guess that's where in higher inflationary times, that's the problem. Right, is they get the multiples get compressed in dollars, right? So I think that's why we're also obviously bullish on Bitcoin, because it is at some level an uncorrelated asset to stocks, right? So in the event that we do have high inflation, if all you own is stocks, you're probably going to underperform gold, Bitcoin, real estate, hard assets, right? So I think maybe the point here, and he's speaking to people that he wants to manage their money, and obviously he's going to get a slice of the AUM. So
that is the narrative that every advisor and planner is saying, think long term, 30 years, 40 years, which is true. I mean, that's true. Like, most people are not actively managing their money, but that doesn't mean that advisors shouldn't be positioning portfolios to be able to handle inflationary scenarios, right? Like, they should, and they should be likely at least somewhat active when the market environment is shifting like it is now, where active management is starting to become more important and more popular again. But I don't know, it's just a lot of people are saying that equities are not going to give us the returns that we've seen, leading to statements like this historically. And that could change. And it very well could, right? Past performance is not indicative of future performance.
yeah, it's more than just a disclaimer. It's real life.
Yeah, totally. So, anywho, I just thought that was interesting because it's true. It's a true statement when you think about it, like, from the big picture. But that doesn't necessarily mean that there aren't times where we can be tactical and protect ourselves.
Yeah. And by the way, I think, so Ryan was saying that Paul Tudor Jones said that he has 5% in gold, 5% in Bitcoin, 5% commodities, and the other 85% will be based on the Fed's decision. So basically he's going to be 50% Bitcoin at some point. What do you guys think?
In your dreams.
I don't know. Who knows?
God, 50% Bitcoin allocation. That, like,
Yeah.
I know people in here have 50% plus Bitcoin allocations.
Yeah.
But it's just like, whoa, you got to have a really strong stomach for that. It's crazy.
Got to be able to handle volatility, because if not, that 50% will go to 5% real quick.
As we've seen.
Yeah. Yeah. Cool. All right. What else we got? Turn. Rotations persist.
Oh, there was something I pulled from this. It was basically, and we kind of know this, but it's just funny, that 80% of the returns from meme stocks happen overnight, over one night, like in one day.
Right.
And
Big breakouts, big parabolic moves.
yeah, yes. And it's funny because it's kind of ruining short squeezes for me in a way, because short squeezes, I would actually get into trades like anticipating short squeezes. I mean, I've been doing that for years, and I'm still do it.
Yeah.
I was, doing it with Bed Bath & Beyond and GME and Abercrombie and Finch and a few others. So I'm into that. But it used to take so much longer for these short squeezes to play out, and you'd almost have like more time to manage your trade. And now these things are just pop. And this happened to me with Bed Bath & Beyond. On the big short squeeze, it popped. I was on vacation, of course, couldn't get out of my position quick enough. And sure as crap, it plummets back down. By the time I could actually get to my computer and get settled and do something, the price was down a ton, because these things, they're just this Wall Street bets. They're just running them, and overnight you're seeing all these gains, and you don't have the time to like necessarily react the way you want to and manage the trade that you in the way you want to. What?
Sounds like you're complaining about the market environment and blaming other traders for your inability to get out at profit targets.
Look, all I'm saying is things have changed,
Yeah.
but people are going to end up like
Basically,
bag
markets are
holding
moving faster now, is
so
what you're
much
saying?
faster. It's crazy. I mean, it's crazy.
Okay. I don't know, Trav, have you noticed that?
Yeah. Oh yeah, for sure. No, I think that's right. We've seen outsized moves happen on compressed time frames in the past year, I would say.
Yeah.
For sure.
Yeah, and they're running them so fast that like they sell off so fast too. And then it's like, oh crap. I think someone said something about that with Wish the other day. Like they wanted to exit out of Wish, but like it like spiked up and boom, 10 minutes later it's down. You know, a big percentage.
I guess that's a function of just like higher activity. Let me see how I can say this right. Higher trading activity on lower volume from more retail traders, right? Because what that's going to do is it's going to have maybe like a thinner market in a way, and it's just going to get squeezed and run quicker. But at the same time, when retail stops buying, it's going to come right back down, and you're going to see a lot more of those parabolic moves.
Yeah, it's just not sustainable.
Yeah. So, I mean, you have a couple of choices, right? You either adjust your time frame and your strategy and you start day trading again on those types of moves.
That's kind of where it's starting to lean to.
Yeah. Or I guess you avoid them and you just go for the bigger, longer term plays if you don't want to get caught up in that emotion. That's why, I mean, I don't trade micro cap or small cap cryptos for some of the same reasons. You know, one, I obviously don't want to get stuck in a trade or manipulate anything, but I also don't want to just be competing against a whole bunch of small money traders because, you know, something could go up 500 or 1,000%, but then it's going to be down, you know, 80 or 90% the next day. Like, I just like to avoid that type of stuff and trade more liquid things. But it is interesting that even larger stocks have started to move that way. I don't know. It's weird.
Yeah, Corsair did it the other day. That's a big market cap,
Yeah.
somewhat, and
Yeah.
it's big enough. I mean, it's not a tiny little small cap, and that gapped up big. So yeah, we're just seeing some crazy stuff, and I don't know. In my day, it just used to take a lot longer for these things to play out and give me time, you know.
Oh,
But
man.
important to recognize that trend in the market and then adjust, like Chris was saying.
Absolutely.
Your trading strategy and your trading styles.
Yeah, I mean, day trading is almost becoming back. It's almost getting back to being necessary again.
Yeah.
You know, day trading used to be like, oh, you couldn't beat the algos, there was no way to win, and now it's like, oh, I need to day trade this crap to make money, you know, to be able to catch it, and because you never know when the squeeze is going to happen, and then when it happens, it's on the gainers list, and then boom, it goes up 50% or something in a day.
So I'm going to take the opposite side of that.
Okay.
And actually, I had a tweet that I sent out the other day. So Barry Ritholtz tweeted some data. Anytime I see data on day trading, I like to share it because the day trading world is such a cesspool of bullshit. It's like, you know, from, I don't know, automated robots that are being sold to people sitting in front of their computer all day trying to make a living day trading. Like, that used to work, right? Back in the 80s, 90s, and 2000s, like, people day traded as a career. But nowadays, there's a reason why there's no more day trading firms on Wall Street, right? It's all computerized. And so this was a study that was actually pretty old data set from 92 to 2006. Over 75% of all day traders quit within 2 years, and they had a negative aggregate performance of all traders over 15 years, right? So the shorter the time frame, the less good your performance is, and only 1 out of 100 day traders earn profits over time. So again, this is actually an old study, and things after 2006 only got more difficult, right?
Yeah.
We saw this this is like pre-algo. So even before the algorithms came in, only like 1% were profitable. And then I said, look, day trading is a losing game for many reasons. First, the high trade frequency, meaning taking lots of trades, introduces the high possibility and probability of making errors, right? Technical errors, emotional errors, whatever. Also, algorithms consistently outperform humans on shorter time frames because they're faster, they're less emotional, they're more efficient. Also, short-term price moves are mostly random. Like, the shorter the price move, the harder it is to find an edge and the more randomness gets introduced into it. And then the final one is hyperactive trading reinforces the fallacy of more activity equals more productivity, right? Like, people think the more they do in the markets, the more productive they are, but that's actually not the case in most instances. It's like the less trades you take, oftentimes the better your performance will be, right? And like, I spent literally over 10,000 hours in my 20s day trading and building day trading algorithms and things that I noticed firsthand how the market shifted and became harder. And like, it was like people were either increasing their hold times or going to different markets like I did, or just giving up altogether, right?
Yeah.
So I just, like, anytime I get data like this, I like to share it and say, if you think you can go out and earn a living day trading every single day, Sometimes you might do okay, but like you can't pull a consistent check out of the markets. It doesn't work that way anymore. Back in the 90s and the early 2000s when they were less efficient, you could do that. You could scalp and arbitrage. But nowadays, the odds of you being able to do that are this big, very tiny.
I agree. I will say this. Wall Street Bets is bringing back moves that day trading is easier to do in.
I agree with that. That makes sense.
So I would say that if you are a skilled trader and you are very good at reading price and precision, there's a way to probably do it if you do it carefully and seldomly, and only when you see the momentum in the chart, like the AMC breakout stuff. Like I saw the breakout before the breakout even happened, right?
Yeah.
And when it broke out, you can anticipate momentum, or you can see momentum as it hits. And like that maybe would have been a good day trading vehicle, and it probably was for a lot of people. But you can't overstay your welcome with it either. So it's a skill set, but I do think the environment that Wall Street Bets has given with a lot of these meme stocks, it could work.
Right. Anytime you have a market that is flooded with dumb money, and I don't mean that as an insult, right? Like that's a technical term, like dumb emotional money getting thrown into market. That's where, you know, traders with precision can step in and make a lot of money.
Come in and know how to read it.
It's the same thing in crypto, right? Like 99% of people that buy or trade or invest in crypto have no damn clue what they're doing. They're either following Kim Kardashian or buying because they feel like it's I don't know. They don't have a structure. They don't have a plan, right? Or a strategy. The same is true in stocks when there's billions of dollars getting funneled into these meme stocks. Yeah. You can make a lot of money trading that emotion. But when that emotion leaves, you gotta stop.
You gotta know. Yeah, exactly.
Yeah, let's see. Okay, let's do some Q&A. Let's throw some questions in
Jim
there.
says, I turned 3K into 100 into the past year. I don't know if that means I turned $3,000 into $100 or I turned $3,000 into $100,000. So I
Could go either way.
You may need to confirm that one.
Steve was asking earlier. He had a couple of questions. I thought this was an interesting one. He says he feels that his mental game risk management is good, but his actual strategy in terms of like predicting price movement is poor. What do you suggest for improving that?
Wait, say that one more time.
So Steve says his mental game, and his you know, I guess his risk management he feels is solid, but his actual strategy for making money is not where he wants it to be.
Yeah, I mean
predicting price movement.
That's
actually making the good trades.
Right. It's one thing, like you have to have both, right? You have to have a winning strategy with an edge, and you have to have the mental game to go along with it.
Yeah.
And
so if you don't have an edge,
if you don't have an edge, you can be the most positive, disciplined trader on the planet, but you're not going to make money. Right. And that's where learning and exploring different markets and also finding your sweet spot. Like, what are you good at? And for me, I found that mostly in swing trading crypto, right? Swing trading and position trading, the large market cycles. I've made exponentially more money doing that than I ever made day trading. So you've just got to explore and like test different things. And, you know, you can learn from other people, but the problem is like, if you try to copy somebody else without knowing what their approach is, you're going to fall flat on your face for several reasons. So my, I guess, best advice would be just to get really curious and learn as much as you can and find where you think you fit.
Yeah. I mean, we do have courses like you have your boot camp on the crypto side, which covers a lot of ways to try to find an edge and ways to like take breakout trades and certain types of higher probability trades. On my side, on the stock side, my stock boot camp is more about fundamental analysis and figuring out like where there might be a mismatch between where a stock is trading and, you know, what the opportunity is or what the fundamentals are saying. And so that's kind of where I found my edge, you know, in the past 2 decades.
Absolutely.
But like you said, there's a lot of different ways. And I know even people, you know, you can find small edges and then double down on those. Like I know people that just focus on small caps under $300 million market caps, and they do fundamentals, but they do it just in this specific area of the market. Or I know people that focus, only on like undiscovered international small caps, and that's where they focus their time. There are people that focus on, just regional banks, and they trade those. And then there are people that focus on quant strategies, right? There's tons of different stuff, convertible arb, right?
Yeah.
But it's all about finding like what is your personal style and the amount of time you have. What does it best line up with in terms of strategy? And then sometimes it just takes exploring what might be an edge for a while before you find it.
Yeah. Yeah. And also like what your personality is best for, what types of trades. Like Rocky, aka Crypto Hustle in our community, he's like a sniper when it comes to buying washout like panic dips. I'm okay, but I'm much better on trend type trades like breakouts and dips during sustained trends. So you've also got to find your comfort level for types of trade setups. Next question. Derek was asking, if you're holding a stock and have a plan for an exit that you expect to happen in a year, but then the price goes parabolic in a week, do you sell or do you stick to your long-term plan?
I usually scale some out.
I scale some out.
Yeah, we're both of the mind that you don't need to be all in or all out on situations like that where you get a very, very fast move like that. Yeah. Because you don't want to have that fast move happen and then you think, oh, I'm going to take profit and then it goes up another 2-3x right after that and over the next several months, right? Funky things can happen. Yeah. GME is perfect example, right?
I would scale some out and then I'd pay close attention to the momentum and the price to see, is it going to keep going? Like which one did that? It was ChargePoint before it was SBE. When we got into that and it like hit our pretty close to our targets in a matter of a few months.
Yeah, 2 months.
And I'm like, what the hell?
Yeah, hit our multi-year target in 2 months.
But, I didn't like scale out everything. I scaled out. I watched price, see how the momentum's looking, see if we hit another target, scale a little more out. Yeah. And then what you can always do is if it goes parabolic and like ChargePoint actually did, it sold off a lot, you can always enter back in and kind of round trip the trade, so to speak.
And I guess it matters too, like why did it go up, right? Yeah. Like if it reaches your target, you go, okay, did it do this on hype or just like was it a short squeeze, right? Or did something change in the business where it's like my target was X, but now it should be 2 or 3X that.
Great
right.
Point.
So yes. So being like dynamic with your management as well,
updating your thesis. Yep.
True.
With new information. It's super important. I'm glad you mentioned that.
Yeah, because we've had that in Bitcoin too, where like in the previous market cycle when we got to, we went from like 1,000 to 5K, and I'm like, okay, this went way higher, way faster than I thought was possible. I don't know where the top is, and it can be kind of stressful, right? Because it's like I'm up a ton, but I don't see signs of it slowing down. So that's where that middle path comes in that we always talk about with scaling out. It's like you don't have to be all in or all out. Scale out at profit targets and see how high the madness of crowds will take it.
What happens though a lot of the times when parabolic moves like that into your targets are fast is people get greedy and they get greedy and they're like, oh my God, it's just going to keep going up. Probably like what a lot of people did with Bitcoin recently, and they weren't scaling out into that, and then they think it's just it's going to go to 100K, and then boom, next thing you know it's at 30K. So I think that it's important not to let the greed get at you when you're seeing price hit your targets quicker than you think.
100%. Yeah, because it's like if you don't take any profit and then it comes all the way back down to your entry price,
you're going to be kicking yourself.
Yep, exactly. All right, let's see. What else is going on, guys? What other questions do you have? I know we've been going for about an hour and a half, so we can start to wrap this up. But, yeah, pretty wild day. Obviously, the Fed announcement, just to do kind of, I guess, a little recap of everything we've talked about. The Fed announcement, no big surprises there. They talked about inflation, but they're still pushing the transitory narrative. We've got some positive and some cringy developments in the crypto space, from Kim Kardashian and some other celebs pumping bullshit to, different Central and South American countries pushing to make Bitcoin legal tender. Paul Tudor Jones also popping more into Bitcoin and other inflation hedge type scenarios. What else? We talked about the employment situation. We talked about lumber prices coming down. Yeah, a lot going on right now. Even though the markets have not been too volatile, there's just a lot of movement, I guess, in the global economy and stuff. So
Nick was asking about T0. We haven't talked about STOs in a while. We should probably talk about that at some point in a show, an upcoming show.
Yeah. I mean, I still have my initial T0 investment. You know, I made some smaller bets in a lot of the STO platforms. And, you know, my prediction a few years ago was security tokens are definitely going to be a big thing, but it's extremely slow moving, right? So I didn't make any of those early investments expecting to get a 10x in a year or two. I expect most of them actually to fail and a couple winners to emerge. But for anybody that doesn't know, STO is a security token offering. So it's where you take, you know, anything like a startup company, or it could be real estate or any kind of fractional ownership, and you securitize it and you tokenize it. So it's more evolutionary than it is revolutionary, right? It's just like a tech stack on top of an existing legal framework for raising capital. But yeah, I mean, I haven't made any significant changes to any of those positions. I'm just really waiting for the market to come together.
Yeah.
There was a news article about a small 401k provider allowing for crypto or Bitcoin in a 401k. I don't know if you heard about
Interesting.
that.
I may have seen something. Do you remember who it was?
Yeah, it was a Wall Street Journal article. It was, maybe you didn't pull it up. I had it in the doc, but of course, they manage about almost $2 billion of assets, and they're going to be allowing their participants to actually invest in crypto in their portfolios up to a 5% allocation. Yeah. So they're capping the allocation, but this kind of sparked the debate that should it be allowed? You know, like, I think that if it's a capped allocation and it's only for aggressive risk tolerances, because you have to fill out a survey to figure out your risk tolerance, I think it's okay.
Yeah.
But this could be the start of this happening with other
The libertarian
providers.
in me wants to say, like, don't cap the allocation. But, you know, most people, should you put all your 401k in? I don't know. I'm not a financial advisor.
I mean, they have fiduciary duties that they have to uphold,
Right,
so
right.
they can't just allow that. But it's a start in the right direction.
Yeah, we'll see. All right, got a few more questions and then we'll wrap it up, guys. What do you guys have, or do you have a percentage of your scaling out method, like 5, 10, 20%? For me, it depends on the setup and what the trade is and what the targets are. Usually I'm looking to do something like a quarter or a third or a half. That's just how my brain works, is like easy fractions like that. What about you guys?
Same.
Yeah, same. Depends how fast it went.
And the position size can dictate it too. But yeah, usually it's in reasonable size fractions like that, 20, 25%, maybe a third.
Yeah. Craig was asking, despite the Fed's announcement of holding off on rate increases until 2023, do you see a scenario where we could have an emergency rate increase before that time? That's a good question.
Yeah.
Like, what would throw a wrench in that to where they're like, hey, surprise, guys, like, inflation is higher. Like, we really got to start jacking this
I
up.
think it's possible. I mean,
Do you think it's probable? Do you guys want to make a prediction?
okay. I don't know. Do we want to make a prediction?
Do you guys, do you have any conviction in that? Or is it like just kind of unclear at this point?
I don't have strong conviction in something like that, but I definitely think it's something that could happen. I think that would probably be triggered by something like an oil supply, structural oil supply issue, where oil did a super spike above, like, $100, $150 a barrel, and that creates really heavy inflation pressure in a short amount of time that's unexpected, something like that. So in that case, you could see maybe a emergency rate hike, but that's pretty unusual. The Fed's going to try to tell the market what it's doing way ahead of time. They're trying to not surprise the market these days. So they're trying to not just completely do a a one-time surprise, and so it's unlikely unless something forces the Fed's hand. And again, I think to force the Fed's hand, you've got to have some really structural inflationary problems.
Right.
And so, yeah, if you had oil, some kind of like oil issue in the oil market where a bunch of oil supply got taken offline and oil prices spike, or some other massive event, then you could have something like that happen. But I'd probably put a lowish probability on it, maybe 10%, something like that, if I just had to kind of like ballpark guess a number off the top of my head.
Okay, cool. Randy was asking, are you feeling, because it's cringy in the crypto market, is it going to turn bear because of that fact? I know the past that was one of the big bear metrics. Yeah, I mean, it's already had an effect, right? Like Bitcoin, it's down by half. Call it half.
Thanks, Elon.
Yeah, I mean, look, I was saying this several months ago when we were up at the top. I had a lot of conviction that market sentiment was out of control. I mean, how many times did we talk about that on the show? I'm like, look, the TA on the chart is not bearish. The on-chain metrics are not bearish, but market sentiment is freaking me out, right? And like, so we saw some of the celebrity bullshit happening closer to the top as well, but it's still happening even as prices are down. So that is kind of a late stage indicator of something to pay attention to, is when celebrities start pumping shit coins. Yeah, that's kind of a top indicator. Now, does that mean Bitcoin's not going to go up in the near future? I don't know, right? We have our possibilities and our plans based on what we think the probabilities are, but it's not a good thing. I don't like seeing it because people lose money. And when a lot of new people to crypto lose money, they get a bad taste in their mouth and they don't come back, right? So as a crypto community and an investing community, we have to do whatever we can to point this shit out and to try to prevent it from happening, because it's not good for the long-term progress of Bitcoin and whatever other cryptos you think will survive. So I don't like seeing it, and I wish they would shut up.
Well said. Yeah.
Or educate themselves.
Yeah, or
Why
just
doesn't
like
Kim
why
have a financial advisor that like advises her before she does stupid crap like she did?
Right.
Like someone saying, "Hey Kim, this might not be a good idea." Like, I mean, I don't get
look,
it.
Floyd Mayweather got sued, and he's doing it again. It's like he was at the Bitcoin conference with a ETH Max shirt on. I'm like, I don't know. Yeah, it's just not a good thing. I'll leave it at that.
Andreas, I was joking. It was a joke.
Okay. Well, I guess we can go ahead and wrap it up there. So it looks like the markets are kind of bouncing. No massive reaction to the announcement, kind of as expected. And yeah, I mean, there's periods of time where the markets are wild and it's like we're taking trade after trade and flurry of activity. And then there's other times where things are a lot more calm. I appreciate both, right? Because these calm times are the times where you can plan and prepare and get your stuff in order and focus and research and study. And then there's other times where it's like you got to push everything out to the side and just focus on the action and placing trades here or there. And you got to know when to push the gas and when to push the brakes. And right now we're kind of in that pause moment, which is kind of nice to take a breather every now and then.
Absolutely.
Yeah. All right. Well, anything else you guys want to talk about before we wrap it up?
No, like you said, we're in the summer doldrums in stocks. So I'm doing a lot of research work. It's been slow grinding.
Yeah. Well, let's get out of here and go on the boat. Let's go do some wake surfing.
Here.
All right. Well, guys, thanks for joining us. Thanks to YCharts for the sponsorship. And if you guys want to see how we invest, go to wetalkmoney.com/community, and you can see all about our wealth building community. You can also leave a question for the show and subscribe on podcasts, wherever you get those. If you want to listen to the audio, I know a lot of you guys do that during your commutes. For you guys that are here live, thank you. For you guys that are listening or watching this later, thank you guys as well. And we will see you next week. Take
Cheers.
care.
Bye-bye.